One thing about really, really wealthy people that I've noticed, because I hang out with these millionaires and billionaires on a regular basis, security. Security is like the most important thing. They don't have the same worries as like somebody working at a factory.
Hey, welcome back to another episode of Wealth Buster. Today I have Martin here, who's a jack of all trades that has been an expert in mortgage brokering business for the last 5 years. And if you're someone who's struggling with continue to pay off your debt, continue to expand on your wealth building process in the current high interest rate environment, you will hear about the difference between HELOC and the traditional mortgages, and also the hidden gem of the M1 account with Manulife, where you can continue to pay off debt and use what we call a Smith maneuver to get your money out efficiently to continue to invest, so you don't want to miss out on this episode. Right now, residential, are most of your clients struggling with it because they can't qualify with the high rate?
Lately, it's been more, it's been a lot of 911 calls to me, basically. Like,
they need to restructure, right? They can't pay their mortgage.
I don't qualify for a mortgage anymore. Yeah. I couldn't sell my property, and I'm buying this property. Or this guy called me today. He's just like, I need you to help me close my property in Calgary. I'm like, okay, cool, no problem. Let me make some phone calls. And, but lately it's been more, it's definitely been more like super emergency phone calls that I've been getting this month. For some reason, I have no clue. Before it was like a lot of A business, mostly A business, a little bit of B business
as well.
So there's A lenders, B lenders, and
okay.
Right? So
you guys only work with TD and Scotia.
We got TD, Scotia, National Bank, Desjardins, Manulife.
You guys consider them all A?
Yeah, those are all A. Yeah. There's a whack of them, and then there's something called monoline lenders, where
credit unions,
trusts, insurance companies. There's a lot of like actual good A business. The benefit with those are all they do is.
What's a 5-year fix now for A lenders?
A really good 5-year fixed. I would say probably like 5.44% would probably
right now
be the
at
lowest.
this moment.
Yeah, lowest 5-year fixed.
My 5.41 was expired 10 days ago. Now they want 6. I want to kill them.
Yeah, it's just a sign of the times. I don't think things are gonna get worse before they get better. Like they're not. Some people. I had a client call me, or I had a potential client. They called me. They're like, "Oh, well, what's your best 2-3 year options?" I'm like, "What are you talking about? 2-3 years? What if in 2-3 years it's 9% when you renew? Are you going to be able to manage that? No. Okay, then get the 5-year. You're getting a better rate than a 2 or 3 year, right?
I can ask you about your crystal ball on that, because I can ask you about the outlook.
Oh yeah, my outlook. I'm the hope for the best, prepare for the worst kind of guy. Right?
Of course.
You know what I mean?
Seen that. I told my friends, it's like, I'm half naked in front of 2 type of people. One is mortgage broker. Second one is my accountant. If they combine together, I'm all naked.
Yeah.
Financially, right?
Yeah, exactly.
But between them, they're still kind of half naked, right?
Yeah, that's right. That's right. That's interesting.
Anything that you think, I didn't tell you anything. Did you know anything about our podcast? What it's about?
I've seen a little bit. I haven't really.
That's fine.
I'll
tell you about it. So, our podcast used to call High Income Earners, FIRE. Mm-hmm. FIRE means financial independence and retire early.
Oh, cool. Nice.
We did it for a year, and I had a co-host down in States, young mom, different personality of mine, a little bit similar to mine. Mm-hmm. We found Nada. Have you met Nada? Mm-hmm. Right. Yeah. Nada was a new co-host. She's not here today. Mm-hmm. Today just 2 guys. Yeah. But I found a different co-host of a totally different opposite personality. You probably see I'm very analytical, down straight to the point, no BS. I want a different personality. And we Our listeners are mostly high income earners. That's my clients. I have a coaching program for stock option investing.
Yeah.
Like how I put it is kind of like in real estate, kind of like you're wholesaling, you're flipping, kind of that's where our quick money. Like we do it in the stock market. We make money just at insurance company. We sell insurance contract. We get paid premium. That's how we make money.
Oh, nice.
The market don't move too fast.
Yeah.
And we're targeting 18 to 54% per year. Or I've been hitting it because
Wow.
I was a guest speaker for TD Bank for 2 years in a row now.
Yeah.
If you go on your TD direct investing, you'll see my face.
Oh, wow.
25% of the time.
No way.
It's kind of scary. Yeah.
That's pretty good. That's
kinda
crazy
scary.
numbers, actually.
Anyway, our podcast, this podcast is just really, I'm casting a really wise net. I try to make my guests shine. In return, if you guys shine, you guys will probably share it to your family and friends. So I want to talk about something you guys are passionate about.
Yeah.
Hopefully I can align that with what our audience, high income earners, are passionate about. So I have accountants, mortgage broker. We just had a financial planner. Sometimes I never had much people talk about stocks. That's the thing.
Yeah.
I mean, probably doesn't make sense. Real estate, a lot of it.
Yeah.
Business owners.
Yeah.
Really just bring value, right?
Yeah. Stocks is a tough thing now, right? Like it's been on such a high for so long, and then now right now it's like the bull market, right? So,
Yeah. We make money
Yeah.
either way,
Yeah.
no matter where the market goes, as long as it doesn't move too fast.
That's right.
Because we're the insurance contract seller.
Yeah.
And yeah, target length is about 40 minutes, but we can go over whenever.
Yeah.
It's more about like, I'm just trying to help you brainstorm any stories. Like people love to hear about failure stories. So,
Failure stories.
do you have any failure stories you want to share?
I don't know. I'm very persistent, man. I don't really like.
It's not
Yeah,
like
yeah.
it could have a happy ending to it,
Yeah,
but people
yeah.
love to see the Hollywood story, right? The rags to riches.
Yeah. Yeah. Oh, yeah. Well,
Fail at some of it.
like basically, I came here. I was born in Poland. Moved.
Oh, Poland. Okay.
Yeah, so,
Okay.
but yeah, started off like my family started off with nothing, right?
Mm-hmm.
It was basically like 7 people living in a 1-bedroom, moving to Canada kind of thing, right? So, but yeah, well, obviously I saw my parents, we immigrated here. I saw my parents work really hard. It's really hard to find a lot of people that were born here that have that kind of drive that, like an immigrant has when they move here. They're trying to like maximize their, existence being here, justify their existence being here. Where people that.
When did you immigrate here?
88. I was like 4 years old at the time, right? But yeah, things like that. Again, work ethic for me is like super important. Like I'll literally burn a candle 14, 16-hour days if I have to.
Yeah.
Right? But
1988, 23, 12 plus 23 is 35. You're about 39 years old.
Yeah.
Yeah. Good.
Yeah, 39 now. Midlife crisis coming up, right?
Wow. It's all about you, right? It doesn't have to be.
How old are you?
I'm 32.
Okay.
I'm 30. I might not look at it. A lot of people like.
It's really hard nowadays to tell how old somebody is. It's
Most people don't know my age. Guess what my age is.
Oh, yours is hard.
I really are. Because I'm not only am I short, but good genes. So now I just look. I'm 24, but people say 19 all the time.
Okay.
Or 16 or 15.
Yeah.
I get like the odd 17, but I get carded everywhere I go. So.
Yeah. Well, that's a good
Crazy.
I
problem.
take
to
it as a
have.
compliment.
It's a good
It's
problem.
a good compliment. It's a
You
good
shouldn't be saying that now, though. You're kind of young to say, "Oh, it's a compliment." Like you're just a little too early here. I know black don't crack, but like, come on, man. Like,
Correct. See? And Asian doesn't raise it.
Yeah.
yeah. Like my son's 17, so my son's closer to your age than you are
Holy
to my
cow.
age.
So you had kids when you were 22.
Yeah. Oh, well, just one son.
Just
kid.
one son.
One kid. Yeah.
Wow.
That's all I need right now.
I know.
He's a teenager right now, so that's
Any
the.
pets?
I got cats. Cats take care of themselves. I honestly, like for me, I literally cut my hair. I shave my hair. I don't go to a barber. I don't have the time to do that.
Makes sense.
But
So what's keeping you busy most of the days?
lately it's been like freaking admin work, which doesn't freaking pay the bills, right? But that's just kind of like the growing pains right now because we've basically revamped the brokerage. What I would like to stay busy with is the stuff that I love to do is like marketing and events and meeting people, networking. That's kind of what I love to do. And as far as right now, it's just been marketing. Then I have
So out of your 25 people, are they all advisors or?
yeah, so they're all agents.
So you don't have any admin?
No, at the moment I don't. It's just such a really weird time because we literally changed direction at the brokerage about 3 weeks ago. The guy that was supposed to be my partner to do this has left because he does the C&E. So he owns Bacon Nation.
Oh, okay.
At the C&E, so he's got I think 10 or 12 stalls or whatever, and all the restaurants and stuff in there. So he's busy with that. That's his annual bread and butter thing. So as soon as we're all right, we're changing direction. Here's our compliance meeting. He's just all right, I'll see you in a month and a half. I'm just oh crap. So I got to do all his work, all my work.
What was your partner gonna do? Supposedly.
Well, compliance, bookkeeping, things in that nature. I was more gonna be take care of the back office, develop our dashboard, our marketing, and then our training, right? So I'm doing his stuff, my stuff, brokering, other people, underwriting. It's just right now, in 2 weeks, things are gonna go back to normal. He's gonna be back. Perfect.
He'll be back. Okay.
Yeah.
Got it.
But yeah, he's the principal broker and.
Janelle, just checking. Are you filming already and all that?
We're all filming. We're good to go. I'm just waiting for you to tell me when we're gonna start. So
I can start a timer anytime. That's fine. We're already chatting. We're already going. Don't worry. Anything could be edited out and all that.
Of course.
I'll do the intro afterwards. I'm just trying to find some interesting talking points.
Yeah.
Do you have any interesting stories to share? Anything you were passionate about to talk about? You think other people don't know?
Yeah. I'm pretty open book.
Anything you know
Yeah.
that you think other people don't?
As far as for me or for
You, for your business, whatever.
Yeah.
Anything that you think could bring value is for me, it's my strategy. Right? Everyone's Cody, I want to know your strategy. I was TD's approaching me.
Yeah.
What's that secret sauce for you that you want to talk about?
Yeah. How do you feel about risks and stuff like that, and being scared of doing something? Are you ever afraid of doing something but end up doing it and ends up being worth your while?
Yeah, that's business owner, isn't it?
Yeah, business. Yeah, basically, right? When I was 3.5 years old, basically, I was playing in my grandparents' yard, and I was playing with my ball and I'm bouncing it around, and we lived on a farm. We had these rain barrels next to the greenhouses and stuff like that, and I threw the ball in there, and obviously as a 3.5-year-old, your head's a little bit heavier than your body, right? So I went to grab the ball, didn't come back up, basically drowned, right? I had to ambulance was on their way, and basically my face was blue. My grandma shaking me, trying to wake me up. I wasn't breathing or anything like that. Wow. And then I finally came to, right? But why I mentioned that is because my takeaway and kind of my...
Do you remember anything?
Honestly, I've actually had dreams since then. When I was younger, still 6-7 years old, I still remember these vivid dreams that I had. It was the gates of heaven, basically, right? Yeah. Essentially, people manifest what they're told, through nursery rhymes and stories and stuff. You are a product of your environment, right? So these stories of and my family's pretty religious, so we went to church and stuff like that. So I had this vivid dream. I remember not too long after we moved to Canada of seeing the gates of heaven and seeing flashbacks of that day. And kind of as I grew older, I kind of put in my mind that I'm not gonna let fear drive me. Where a lot of people get bitten by a dog or had a very traumatic experience as a child, and then they have this phobia, they have this fear that they're just like, you know, that prevents them from doing things, right? And for me, I've always been in business my whole life. I've always I like to work for myself, and that comes with a lot of risk and a lot of unknowns and a lot of uncertainty, right? You don't know how your next month's gonna be. It's not like a steady paycheck or a steady salary. It's you get out what you put in, right? So that's something that was really important for me, a big traumatic experience in my life that kind of steered like my moral compass, my judgment and stuff like that. Like, for instance, I'm terrified of heights. Terrified of heights. So I was a roofer.
Wow. Yeah.
Working off heights. Yeah. I was installing windows and doors off, sky rises, 20-story buildings, sitting on a swing, hanging 20 stories with my tools, installing windows and doors, right? So, or windows basically at that point. But I just don't let fear hold me back. And a lot of people do that, especially in, I don't know, it seems like the newer generation seems to do that quite a bit. Like they're just like so sensitive, and I feel like our generation's a little bit tougher kind of thing, right?
I know, like, especially people from Poland, right? You guys immigrated here when you're 7 and nothing was given. You work hard for it. Mm-hmm. What was your mentality? Do you think that's your immigration mentality? Just say, hey, if I'm afraid of that, I'm just going to do exactly that? Well, what do you think that helped people to get over their fear of all that?
No worries. So and it was a different time back then when we immigrated, because there wasn't handouts. There wasn't like a support system. Our support system was from the church. Here's a place, enough money and food for 2 weeks, and then you figure it out from there. Oh, yeah, by the way, learn English along your way. You want to learn English too, right? Yeah. So a lot of people, not taking that risk, you're never going to see that reward, right? Like, and that's why people like gambling and stuff like that too, right? Like they're, the higher the risk, the higher the reward, right? You put your number, you put your chips on one number rather than a color. Yeah, you're going to have a better payout, right? But you just have to be kind of in tune with yourself and realize, that's something that you're willing to sacrifice that, or willing to kind of get to that decision where you're gonna reap the benefit from it or start over, right? Mm-hmm. I'm not afraid to start over, and I think a lot of people probably are, and that's what holds a lot of people back. So
even
right?
We chat about this offline. You have a son that's 17 years old, mm-hmm. but that still doesn't. You're still not afraid of starting over, even though a lot of people might think you have a lot of stakes, mm-hmm. high stake, but you don't think like that.
If you're good at what you do, or that you're confident with what you are able to do, then something like that doesn't really scare me. Essentially, if let's say I'm in finance, if the market crash, that. I've done construction. I could pick up my tool belt. There's things that I know that can't be taken away from me. Mm-hmm. So no matter what, again, coming back to that immigrant mindset, it's something that I saw my parents take a huge risk, mm-hmm. and make something of themselves. And I know that I can do that too. Yeah. Even though they brought me to this country, I wasn't the one taking the risk, but, growing up in Canada, it's a great place to live, but it's a hard place to live too. Like we're so overtaxed. Our money doesn't stretch as far as it should,
mm-hmm. especially after the last 3 years.
The last 3 years has been, it's horrible. Like for me, like I'm always preparing. Yeah. Like hope for the best, prepare for the worst. So I got a nice 5 kilo bag of rice. I got I got flour. I could live in my house without having to leave and eat for the next year. No problem. I could do that.
So you're one of you're like me. And And a lot of wealthy people do that, right?
Yeah.
They sometimes has guns too. They have like all these stuff, right?
Yeah.
Reserve of food, water, always readily available just in case apocalypse hit.
One thing about really, really wealthy people that I've noticed, because I hang out with these millionaires and billionaires on a regular basis, security. Security is like the most important thing, because they don't have the same worries as like somebody working at a factory or something.
They're more looking for the consistency and stay where they are,
Yeah.
not the maximum return or doubling their money. They're like, how can we stay where we are because we're very comfortable? How do we be more consistent and be more safe?
Yeah.
Right?
Oh, absolutely. Yeah.
Right? It's a totally different mindset. And most of our listeners are probably already reached their fire or on their way to reach their fire, net worth anywhere between 1 to 10 mil. Some of them are more than 10 mils and all that. Right. So when you look at these high net worth people, millionaires, billionaires, to look for security, what are some of the traits that you notice that they do, things that they do that you seem kind of odd at first and it's starting to make sense?
Well, they definitely don't put all their eggs in the same basket, right?
Explain more of that.
They definitely, so they could have a super successful business that's not going anywhere.
Yeah.
But I see a lot of vertical integration with that business and multiple businesses that they have. And everything just seems to, everything like doesn't make sense on a micro level, but on the macro level, you look at it and be like, wow, that's perfectly integrated, multiple streams. If this suffers, but this is going to do well, this suffers, that does well, right?
Is that in the same, that's for example, let's say a home builder, right? Then this company start vertically integrated to getting into the material of lumber. Are you talking about this kind of vertical integration?
If you're gonna supply and build, then do the sale, and then maybe the builder owns the supplier, but also the real estate brokerage, and then the mortgage brokerage, all kind of it's got that synergy in it, right? So I see a lot of that, especially people that do very well, like. And they own a real estate office, then they own a staging company, then they, so it's multiple touches. You could have one client and touch that client several ways but still using your businesses to prosper from. That's the genius of really wealthy people or really successful people.
Yeah, like for us, most of my clients who's in our mastermind program for making consistent cash flow through stock option investing, most of them are real estate investors. And for us, we're like, okay, a lot of them ask me about my accounting. Who's my accountant? So if someone is asking that, we're working in the back end of prepping my accountant ready to expand so that we can help out more people. But then ask me, Cody, what about your podcast? Who's doing your podcast? Who's doing your YouTube video? Who's doing it, this, that, right? If they're already seeing success, they want to just pay for it and get it. Yeah. Right? So that's kind of your multiple touch.
Yeah. And honestly, and when people do mimic what you're doing, that's a pretty ultimate form of flattery, right? But and it does take time to kind of source the right people, right? And you might not have the right people right away. And this is something that I've learned off like very successful people is they know the right people for the right job, right? And
they know how to spot it. They know how to put them in the right position and train them and hang that carrot in front of them. Yeah,
and take care of them. I remember I walked into this gentleman's stable of cars. He had a huge factory of old cars, and we're looking at nice old cars and stuff like that. And he takes us to this room. And because I remember before he took me there, I'm like, yeah, you know what? I really like those like restore mods, those retro mods kind of thing. You take an old car, you put a brand new engine in, and you put new brakes on it, right? Like my dream car is like a '66 Eldorado. I would love to have that.
Nice
7-liter engine, 100 horsepower. 100 horsepower doesn't go anywhere, right?
So inefficient, but sounds so nice.
Drum brakes, like. It's a convertible. You could fit 7-8 people, probably. Burly people in a convertible. You can't find that anywhere. hood is like the size of a football field, and same with the trunk, right? But imagine taking that and putting, a Viper motor in it, and then putting, disc brakes, ABS, that's what I liked. I told him about that, and then he just took me to this room, and he's just like, yeah, this one's got a Corvette engine. This vehicle here, we're putting a Viper engine in it, and he's got this mechanic that works for him, and he does this work. He found this mechanic, and this guy is just a genius. He only works 2 hours a day. The first hour he works, the second hour he sets up for the next day for the next hour of work. But meticulously, here's the bolt, here's the screwdriver for this bolt, here's the wrench, here's, like literally everything is laid out perfectly. So that 1 hour that guy is working is just whoosh, does it so perfectly, marks everything out like chalk, like this bumper, I took this bumper off, but he marks around the bumper before he takes it off. So he has the alignment perfect, so that's, finding somebody like that, he's just like, that guy there, I take care of that guy. I'm just like, okay.
Because they know their stuff, and most of the work, just like a mortgage broker too, a lot of time it's not about just who gives the lowest rate. It's about, does someone really care? Does someone really understand your portfolio and know where you want to go, and being resourceful of getting what you really need to get there? A lot of time, this one deal is like, Cody, you have to buy a BOLA on this one because you have some equity leaving it, but lock it in so you can use it as a collateral down the road. Some of the time you can, increase the surcharge amount for this one. I know, Cody, but you lock it in for 3 years, but the rate's not going anywhere. Yeah. So lock it in first, so down the road you don't have to requalify with something like that, right? So, like,
it's the long vision. Like if you do meet a mortgage broker, you do meet a professional, and they, instead of just saying, okay, this is your refinance and I probably won't hear from you again kind of thing, you want somebody that's like, okay, so I'll give you this mortgage 5 years down the road. This is what we're going to do once this is paid off, because we're utilizing this strategy to pay off your mortgage faster or whatever. I see your cash flow. I know you can do it. This is what we have to do. Instead of 25 years, we're paying off your house in 7 years. We're going to take that equity. We're going to use that. We're not going to get another mortgage. We're just going to use the equity. We'll write a check. We'll buy the next property. But somebody that has that like long-term strategy. Obviously, every situation is different. But finding that person that sees the vision on a macro scale is what separates the people that are successful and the people that aren't. Right.
And let's take a deeper dive into what you're doing now or for the past 5 years. I know you have been a roofer, you have been a factory line worker, you have been working in the Moose factory up in Hudson Bay. But for the last 5 years, you started your own mortgage broker business. Tell us more about that.
So technically I am self-employed, but I work for a mortgage brokerage. I found a perfect spot to work at. So I was in finance for a long time, doing automotive finance and sales.
Were you the financial managers for one of the dealer?
Financial manager, general manager. I worked basically all.
Which brand did you work with?
I was mainly working in the subprime industry. So there were like Approval Genie, the Approval Store, the Toronto Auto Group. So those were subprime auto finance. Those were the difficult to approve car loan situations. So
tell us more about that. I think a lot of people who don't know might think that if people cannot afford the car, they shouldn't buy the car. Why would they go for such a high interest rate, such a bad record on their insurance, bad record on their finance? They still want to get that car. Are mostly those people not financially educated, or they have a different plan?
Most of it is necessity. If I can't drive, I can't work, or I can't find work, or whatever. That was a big point, especially if you're not living in the big city. The second part is probably one of the best way to rehabilitate somebody's credit is with an automotive loan, because what I've found over the years and over a long time, especially looking at people's credit bureaus before and after, is credit scores tend to build by the monthly liability that's on the credit on that line of credit, or it could be an installment loan or a line of credit. So credit cards have a minimum payment. You could have a $10,000 credit card. Your minimum payment could be, $200, $100 or whatever. Where a car loan, $400, $500, $600, $700 consistently a month is your minimum payment. So your score will grow based on how you're able to manage that payment. If your score is very low, it will rise really quickly. But then once you start getting to 600, 700, it starts to plateau quite a bit. And then at that point, it's credit utilization and length of credit history.
Correct.
So a lot of the times, like I have a bankruptcy trustee that keeps sending me clients even to this day. And, so if somebody goes bankrupt, consumer proposal bankruptcy, and I tell them, I hope it's a big one, because you get that one free bankruptcy consumer proposal in your lifetime. After that, it's, So
is that what government is?
So I've had a lady that went bankrupt and she only had $2,000 worth of debt. And then I had a gentleman that was bankrupt and he had $100,000 worth of debt. The person that had $100,000 worth of debt before going bankrupt had an easier time getting a loan than the person that had $2,000, right? Wow. Because you gotta. So if I knew all this when I was younger, I'd probably buy a bunch of gold, bury it, go bankrupt, and then eventually that comes off your record, right?
Well, that's the tip of the day. Okay, we're not suggesting it. Not any financial advice.
Yeah. Go big or go home. If you're gonna do it, just make sure it's worth it, right? So that was interesting. But it's not so much financial. My whole approach to the subprime auto finance was financial literacy and understanding. I'm like, well, have you ever seen a credit bureau? No. Here is your credit bureau. This, and I explain line for line. This is what happened here. What happened here? Okay, you should have done this. You should have done that. I explained to them how to fix their credit. And essentially, in that space, if somebody came to me and they have and I got them approved at 29% interest rate with TD Bank or Scotia Bank for a car loan, which is ridiculous, I know.
They still give up 29.
They still do that. 5-6 year terms, right? So you're paying more than double the price of the car just in cost of borrowing, right? So the name of the game was, okay, we need to reestablish your credit. You're at 29%. You're a 400 credit score. Here's your vehicle. Make sure you make your payments on time for the next 12 months.
Yeah.
Once that happens, that person.
Oh, then you can shift them to a higher level. Okay.
So I can tell them, come back a year later, and this is like no matter what subprime automotive place you go to, it's going to be the same thing. As long as the payments are reported on the credit bureau, they come back after a year. Instead of 29% interest rate, there's basically 3 options that they're going to have. They could go from 29 to 14, 29 to 9, or 29 to 6%.
That's such a big jump.
Yeah.
So you're playing not the long game, but you're just bite the bullet for a year. That's the only way you can get out of it.
Yeah. And the first car might not be the car that you want. I know you came in here looking for a Land Rover and you drove off in the Mazda 3, right? But the next car should be the car that you want to keep, right? And then obviously it's about debt servicing, your income level. Obviously you're not going to work at McDonald's and buy a Land Rover, right? But everyone can dream, right? But my job was basically bringing people back to reality. This is how the system works, right? You're either going to be oblivious to it, or you're going to learn this now, and you're going to be a better person for it. So so that's kind of what actually led me into the automotive or the mortgage space. Yeah. It's the same thing, same kind of deal, just thicker files. The clients that I have are much more significantly different, right? Somebody buying a car, somebody buying a house takes 2 different kind of people to do that.
Yeah. Right? So people, can you kind of explain, people who buy a car trying to fix their credit, they're probably, not as financially literate. You help them out. Someone who buys a car, treat them as their first house, where an investment is totally different net worth for people, and just totally different financially literate abilities different too, right?
Yeah, absolutely. I find that people that have been able to save for the down payment and stuff like that, they have a better grasp how everything works, how to be able to accomplish that, right? Where somebody with a car trying to buy a car, they might not necessarily have money saved up. They're probably living check to check.
Yeah.
Not necessarily, but I see more of that from that space than I would of the real estate space. Mind you, I've had people call me to purchase a house, and it's like, yeah, me and 3 other co-signers. I'm like, great. What do you guys do? Oh, we're all on
Self-employed.
ODSP, making $1,400 a month from the government, right? Like I've had situations like that. I'm like,
Well, at least they're smart enough to gang up. I think that they can consolidate.
They ganged up because their landlord was kicking them out and they needed a house. And then I'm like, okay, so how's your credit? Horrible. Okay, you need at least 20% down. They're like, oh, okay. What about buying land? I'm like, okay, so you're gonna need to buy the raw land. I could finance 50% of it.
Yeah, it's only 50%.
And then I need you to come up with the other 25% to bring the project to 25% completion before I release the next, the next draw, right? So it
didn't work. I just say, in short, it didn't work.
For them, that was the last call I got from those people, right? Thankfully, but I had to explain to them what they're actually doing. They were just kind of like pipe dreams kind of thing, but
Do you work with, I know, like we chat offline, most of your clients do residential, right? That's probably 90% of your work, 95?
Absolutely, yeah.
What are some of the trades, or what are some of the top clients of yours that are doing right now that you think maybe our listeners can learn from them?
Actually, the number one thing that people should do, and not a lot of people are, is using your prepayment privileges and shortening your amortization, because honestly, a lot of people don't understand how compound interest works, right? And that's probably the biggest thing that most people see throughout their lifetime, getting any type of loan, whether it's a car or a mortgage, and those are usually the biggest debts that people have, right? But there's different ways to go about it. There's velocity banking, where you're using simple interest to basically to pay down your principal, but most people that have a mortgage have prepayment privileges, and so few people do it. And the people that do it have the opportunity to, draw from their equity in their home and purchase multiple properties, get long-term tenants, buy cottages, flip those on a weekend basis, and have good income coming in, right?
So you're saying that a lot of people don't know, even your top clients, are what are they doing is that they use their prepayment privileges, as in they double down their mortgage payment so that they pay down their principal more, so that even in a high interest rate environment where their trigger rate get hit, they don't get impact as much.
That's right.
The money that they pay back in doesn't mean it's debt money. They still continue to get the equity out at a much lower interest rate and then continue to invest. Yeah. Is that what you're suggesting?
Oh yeah, absolutely. And it's but in order to do that, your cash flow has to be good, right? I've seen too many situations where people have tried to do that, and it's great, but again, you have to.
Maybe a lump sum is better than doubling down every month.
Yeah,
if it's a lump sum, it's paid.
You have a little bit more flexibility, right? Yeah. Than increasing your mortgage payment. That messes up with your cash flow. And throughout the year, people spend more or less money depending on what time of year it is, right?
Yeah.
So like Christmas time, you're going to spend more money. Summertime, you're going to probably spend a little bit more money, like traveling, vacations, and stuff like that. But there's certain times of year where you're going to spend a little bit less, and that's, but instead of putting that in savings, it makes more sense applying that towards your credit or what's your debts. And I'm a firm believer, until all your debts are paid off, every dollar that you earn doesn't belong to you. And there's a really good way of actually applying that towards your overall debt than the conventional sense. For instance, using a HELOC instead of a conventional mortgage. The big difference to that is simple interest and compounded interest. Simple interest is calculated daily. Compounded interest is basically semi-annually is compounded. And so Manulife actually has a really interesting program, because instead of having a checking,
I know where you're going with
savings
that.
account.
Keep going.
Yeah, you know this one too. So instead of having like a checking savings account, a HELOC account, whatever, you have the Manulife one account. Your paycheck gets deposited, immediately applied towards your debt. You're saving a daily interest based on your whole paycheck. And then when you need the money, you're essentially borrowing.
Yeah.
You're borrowing every time you're pulling money. Until your debts are paid off, you're always going to be borrowing, right? Because right now, if you take your money and you save it and you put it in a savings account, that doesn't make sense. You're either should be investing in it, in investing in other people, or investing in yourself by paying down your debts. Because the interest rates that these companies are charging you to borrow this money is significantly higher than anything you're going to get from a high interest savings account, right? Correct. So,
especially when the interest rate is higher, right? In the past, when the interest rate is 2, 3, 4%, you can easily find an investment that can beat that, and you have a spread in between.
That's right.
But when the prime is 7.2% right now, as we're recording, August 22nd, 2023.
Yeah.
If you want to borrow at 7.2%, and even as a HELOC is 7.2 flat or 7.2 plus 0.5, at 7.7, you better make sure you find an investment that can make more than that with a risk that you're willing to take on and still make sense.
That's right.
So the easier way is actually you pay down your debt first, so that if you need it to invest, you can still pull money from the credit. But that's, we're talking to people who already have credit line established in the first place, right? So if people are listening to this, I'm like, before I quit my full-time job, I went into all the banks to pull as much of line of credit I can. Not that I need it, but when I need it, I can't get it.
That's right.
Right? The moment I quit, the first 2 years, I can't get anything. But I have like $400K line up.
No problem.
No problem.
Takes money to make money, right?
Exactly. And I never used it, but there's some real estate project I need it. And if I see a low interest rate, they give me a transfer balance, whatever, for 0% or 2%. I'm taking it. It's too cheap to pass on.
That's right.
But if you don't have those credit line established, you never have those opportunity.
I think if I added up all my credit cards, I probably have like $140,000 in credit card limits, right? Like, why would I'd be insane to do that. If things hit the fan, I would pull that out, buy crypto, move to Jamaica, and whatever, right? But
that's an advice from a mortgage broker in case the apocalypse happens.
Yeah, that's right. Yeah, CRA, I see you. But it's super important to have access to money, right? And
access to money or access to credit at least. But it takes discipline to have the credit, but only use it on the right purpose.
That's right.
Right?
Yeah.
Right.
Sometimes I tell people, I'm like, hey, just take your credit card, throw it in a cup, fill it with water, throw it in your freezer. And if you want to buy something, you pull that out, you wait for that ice to melt, and hopefully by then you change your mind, right? But like,
that's
people,
an interesting thing. Put your credit card in a bowl of water and put it in the freezer.
Yeah, that's it.
So whenever you need to buy something, you have to think, look at that melt.
Look at it, wait for it to melt. Do I really need this? People are too very... Like, especially in this day and age, everything's just a click of a button.
Yeah.
Click,
and that's why they make it easy for you, because you buy it without thinking.
Yeah, it's too easy.
You don't feel it.
And that's why, like, Canada, US, we're like the biggest consumers in the world, because it's just these companies, it's just propaganda. We just get bombarded by all these advertisements and that instant satisfaction, especially in North America, that we always want. It's just like, I'll just pay for it later. But you're borrowing from your future income. Correct. You're borrowing from your future cash flow, essentially coming in. Correct. And that's why a lot of people get caught, is because it just becomes too easy, and they don't see that money being taken out.
Yeah. So like I have friends who are mortgage broker. A lot of them are, some of the ones that are not as sophisticated are being hungry now, but the more sophisticated ones are busy saving people from not being able to pay their mortgage, restructuring their debt, lowering their interest rate, or just kind of like what you did for the subprime automotive financing. Is just, I know you're going to bite the bullet in the first 1 year, but we're going to help you out, but you have to bite this bullet, right?
Yeah. There's the easy way and there's the right way, and doing it the right way is definitely going to be the harder way. So, yeah, you can't build a foundation on sand. You have to have a good structure. You got to have a good base and build from that, right? Like, especially on the ground level of if somebody has bad credit, well, what are they going to do? They're going to wait 8 years for their credit bureau to clean up, and there's nothing on their credit bureau, and then they're just as risky than they are with defaults on their credit bureau, right?
Yeah.
But yeah, especially with credit and finance, it's you got to look at things on a time scale, right? There's this actually really interesting poster that I really, really want to get, and it's you put in your age, and then they send you a poster, and then it's a bunch of dots, and each dot represents a week of your life, and they've already pre-filled your age, and then every week you fill out another dot, and then you see the end of your life is here, right? So people need to put your whole life. All right, I'm 40 years old. What have I accomplished? Where am I going? What are my goals?
Yeah.
What do I need to do? How do I get there, right? And especially with investing and stuff, you have to have that long-term, that foresight essentially and the plan to get there, right?
So I know you're a mortgage broker. Your broker also, you have 25 agents working under you. You're the operational director for your brokerage. What do you think, as a team, as a person, what's that expertise that people come to you for? What's that strength that you have that makes you stand out?
I kind of feel like I'm an easygoing guy, but for me, I don't like to waste people's time, and I don't want my time to be wasted either. I'm very straight to the point. I find too many people in this industry beat around the bush too much, like overpromise and underdeliver. I set the expectations right away, and I'll tell you I could tell somebody within 5-10 minutes of meeting them what they roughly qualify for. Like, I have that experience to do that. Like, I could, instead of gathering all your information, all your documents, just to tell you, hey, we can't do anything, I'll have a quick conversation. I'll tell you whether we can do something or not, or what needs to be done, or what we should consider, right?
And with that experience, what kind of question you ask to get that? Is it like, hey, what have you been doing for the past few years? What's your job?
Yeah. Well, yeah.
What's your saving look like?
The typical job, savings, credit. Those are the basics. Those are off of those, everything stems out of there. Your investments, there's so many different ways, especially as a mortgage broker, there's so many different ways to skin a cat. We can literally, use wealth programs, use equity programs. I could do reverse mortgages. I could do a reverse mortgage to somebody that's like 21 years old. If they have the equity in their home, I can do a reverse mortgage for them. That means they don't have a mortgage payment. What does that do, though? That actually opens up their cash flow so they could qualify for more properties if income is a problem, right? Like, if you have too many liabilities, get rid of one liability. You're just going to be losing your equity on that property, but you'll be able to obtain more properties by doing that. So yeah, there's a lot of different situations, and a lot of different avenues that you can take. But for me, I'm very well rounded. Like, I could jump from the A space, the B space, the private space, and I know them all very well. So where I find I've met a lot of brokers that don't know how to do a private mortgage, or don't know how to or just do private mortgages, don't know how to do like an A lender, institutional lender, or a credit union, or things like that. But to have a full tool belt, like, you don't want to be a contractor and show up with just one tool and the tool that you need isn't in your belt, kind of thing. You want somebody that has a big bag full of tools, a big truck full of tools that they can handle any job, right? That's mainly kind of where I think I stand out from a lot of people. But there's also a lot of brokers and stuff that are on my level or have the same kind of experience or even more experience than me, right?
Cool. Anything you want to share? Some of your struggles, what lessons learned for the past 5 years of running a mortgage broker? How far have you guys come? What are some of the struggles?
Yeah, there's a lot of struggles. For me right now, the main struggle that I'm having is with this admin work, this extra stuff.
I can help you solve that. Don't worry.
Yeah. It's the extra small things that doesn't really justify really putting somebody as a full-time position there, but needs to be done kind of thing.
Yeah.
And those are the admin work. Nobody gets paid for admin work. Like, you pay somebody to do admin work, and that's been my main struggle. But it's not nothing that I can't handle, because I'll wake up at 5 o'clock in the morning and I'll get ahead on that stuff. And then by the time I leave the office, it's 8 p.m., 9 p.m.
But that's the thing, though, because a lot of business owner, if before they can scale, they really have to look back at, if you wake up at 5 a.m., go home at 8 p.m., is that sustainable? It's only when you think that I can't work harder, I have to work smarter, if I have to hire, I have to give out some revenue, I have to do that. That's the only way you can scale.
Exactly.
So a lot of people say, Cody, I'm just going to work double hard. Okay, but something else is going to break and you're going to actually do less, right?
But even circling back to when I was giving advice to those people with bad credit for car loans, you got to bite the bullet sometime. And then, but is it
you have to come
for
to a point that you make
term?
Yeah,
That's right.
You have to take on some calculated risks, and you know the game plan. That's why you do that. For example, a lot of time I hire people that knowing that I only have a certain period of time can pay for them, but usually it works out because I took the leap of faith.
That's right.
Usually it works out, but for normal people, just I'm just lazy. I'm not going to do that, so I'm going to hire first. Most of the time, it's like you should at least know how to do 70% of the job before you hire. Otherwise, you don't know how to manage the people you hire.
That's right. I want to understand.
At least understand enough.
Right.
Like, what are the key points, the variables that you're looking at, right? So,
Yeah, that's right.
cool. This has been a pleasure. Anything else you want to mention to your audience as your wisdom as a mortgage broker for 5 years?
Basically, probably the most important thing is, it's a good question. Experience. What I would probably say is,
If our audience can only take away one message, what would that
one
lesson
message.
be? From all your experience working with clients,
Yeah.
especially the higher net worth clients and all that, what should they do now?
I think the most important thing that everybody should do is look at things on the long term. Too many people are short-sighted, and that's where a lot of people stumble, is because they didn't have the foresight. Or, if you're looking at rates, look at 40 years. Don't look at the last 5 years and be like, okay, the next 5 years are going to be like the last 5 years. You got to look at things on a larger scale than just the micro level. That's what I suggest.
So what's your crystal ball on rates in terms of length, in terms of how much more are we going up?
I'm pretty positive that things aren't going to get any better anytime soon.
What's that anytime soon?
So the people that are looking at 2-3 year terms and expecting things to be better by then, I wouldn't bet on that. For me, I would say at least in the next 5 years, things are going to be relatively similar to what they are now, if not higher. Things aren't going to drop till we have a change in policies, change in government, change in work ethic. There's going to be a lot of changes, especially with AI and that replacing several jobs and stuff. So people have to have the foresight of, hey, am I replaceable by a computer? Or, so the main thing is, especially for rates, is hope for the best, prepare for the worst. Start saving. But when I say saving, I mean apply that towards your debts. Be as debt-free as humanly possible in the next 5 years. That would probably put you on a winning ticket for sure, for the long haul.
So we had different mortgage broker, my friend, come on. By the time this episode dropped, like that episode already is released. Personally, I think for the next 1 year, we're still going to stay high, maybe going to be higher. But there's a lot of signs showing that the rates might turn in a year. But here, Martin is also an expert, thinks that the rate will stay the same, if not higher, in the next 3 years. So however you guys think as listeners, okay, just if you treat it, you want to be the safest, look at 5 years. But if you want to be a little bit more aggressive, think about 3 years, the rate might start turning around and stabilize at 4%. But none of us has the crystal ball.
Yeah,
that's why life
nobody
is interesting.
really knows, and this is and that's the thing. If you're prepared to deal with a higher rate, and that's something that you're willing to risk, it's a gamble, right? Either way, it's a gamble.
I hope no one's gambling. We're taking calculated risk because we have reserve funds. But
that's right. Reserve funds is actually very important, and that's why I say having that debt paid off. That's going to be your reserve funds on your credit or your lines or whatever the case is, your mortgages. You know, prepare for the worst, but be mindful of what's going on and keep an eye out on the market, and that's going to probably determine your decisions, right, going forward.
Well, thanks for coming on, Martin. I really enjoyed the chat.
Buddy.
Cheers.
Cheers, brother.
Cheers on that.
Thank you so much.
Yeah.
This was fun.